The S&P 500 went up 7 consecutive days, with 7 consecutive all-time closing high. Will the S&P 500 ever go down again? And what could be driving this market higher? We will try to answer these questions in this week's S&P 500 analysis, so stay tuned. Welcome to another S&P 500 analysis. Today is November 6, 2021. In this video, we will analyze the price action of the S&P 500 and the other major market indexes along with the market sentiment and the market internal and see what is driving this market and where is the S&P 500 heading. Let's start with this weekly chart of the S&P 500. For the week, the S&P 500 gained 91.15 points or 2%. The range was 123.44 points. The S&P 500 has been up 5 consecutive weeks, and it is getting near the upper price channel trend line and close above the 10-week moving average and also the 40-week moving average. From this assessment, the weekly trend remains to be up. We'll take a closer look at the price action after we have reviewed the sentiment and the internals. First, we'll look at the VIX. You see, the VIX is sitting down at 16.48 below this 20 level. So the market participants are still relatively fearless and are complacent. And also the put-call ratio is under 0.75 and sitting below 0.5 on Friday. It closed at 0.49. So the market participants are continue to putting on risk. For the up-down volume ratio last week, it was kind of mixed bag because the S&P 500 closed with a gain every single day of last week. But we did see some day, every other day, we saw a negative up-down volume ratio, which means that the down volume was more than the up volume. And also we see at every other day that the up volume was higher than the down volume. So we see a positive up-down volume ratio. And similarly for the advanced decline, the daily advanced decline, as you can see, on Wednesday it was positive. And also on Friday, it was positive. In other words, there were more advancing issue than declining issue. But if you look at Tuesday and Thursday, it's actually negative. I mean, there were more declining issue than advancing issue. So again, the breadth is kind of mixed bag. Now, in the New York Stock Exchange, the new 52-week high versus new 52-week low, although the 52-week high came up a little bit, but I think the more remarkable thing is that the new 52-week low actually went down or did not come up. So throughout the week, there were more new 52-week high than 52-week low. And here in the New York Stock Exchange cumulative AD line, that was pretty impressive. Remember, we are looking at a little bit of a negative divergence. But as you can see right now, it is moving into a new high along with the S&P 500 closing at a new all-time high. The Nasdaq 100 also closed up 7 consecutive days, as you can see, and it's also doing a one-time framing up. And the up-down volume ratio is actually performed better than the New York Stock Exchange because every single day, the up-down volume ratio was positive. So that means there were more up volume than down volume. Now, on the advanced decline, the daily advanced decline on Thursday was actually negative. That means there were more declining issue than advancing issue, but on all the other days, it was actually positive. And also the other thing in the Nasdaq market is the new 52-week high. The number of new 52-week high really came up, and it was up at 440 new 52-week high on Friday, and there were only 90 new 52-week low. So the margin was 350 more new 52-week high than 52-week low. So that's a significant improvement if you look at the trend of this new high and the new low. Now for the Nasdaq cumulative AD line, although it did not make a new high, but it is making a progress on making higher high along with the Nasdaq 100 making a new closing high. Still, we have this massive, long-term negative divergence, and it is quite a way from this high here. So definitely, we need to see more acceleration on the advancing issue over the declining issue on a daily basis for the Nasdaq 100 or the Nasdaq market in order to erase that negative divergence. So from the sentiment and also from the internal, we see that there is a little bit of a mixed bag in the New York Stock Exchange because of the up-down volume ratio, kind of mixed bag, and also the advanced decline. But the New York Stock Exchange cumulative AD line really shows some strength as the S&P 500 closing at a new all-time closing high. The AD line also moved up to a new high territory. And then for the NASDAQ, although the advanced decline line is not, getting close to that high, but it is gaining traction on moving higher. And also one of the remarkable thing about the NASDAQ market is the number of new highs coming up. So we are seeing an expansion on the number of new 52-week high in the NASDAQ market. So overall, there are some strength showing from the market internals. Now let's go and take a look at the price action of the S&P 500 and the other major market indexes in a little bit more detail. Now looking at this daily chart of the S&P 500, remember last week the video that I put out, we're talking about the possibility of a little bit of a pullback. And if it does pull back, then we essentially are looking for these gap fill to get filled here, these gaps to get filled. And the other scenario is that if it continues to move up, we're basically looking at somewhere around this 4,700 level near this trend line. And as you can see, that it came up and closed right inside of this shaded area that I marked off, even though it went above this upper channel trend line here. So for the next week, if it continued to melt up, then we're basically looking at this 141 extension, the 4746.41, or close to 4750 level. And this right here, basically I have redrawn the Fibonacci retracement with the extension using this particular swing, price range here, this particular price range, and move that up. As you can see, it pulled back into this retracement zone and stay above the 38.2, just slightly under the 50% level, and we got a nice bounce up. And right now it exceeded that 127 level at 46.77, and looks like it is trying to move up to this 141 extension at 47.46. So keep an eye on that on the upside scenario and see what it encounter resistance near this 47.50. And if it does pull back, then we are looking at the possibility that it might move back for this high here near the 45.45. And similarly for the NASDAQ 100, we're looking for the NASDAQ 100 to pull back and come down and retest this high at 15,701. As you can see, it just continue to move up. And we're saying if it push up, then we are looking at this particular upper channel resistance, this trend line as potential resistance. And here's that shaded area here. So right now it exceeded that level and poke above this channel and getting into this 127 extension at 16,445. Then it kind of got a little bit of a rejection and closed below it. This extension is coming from this particular swing here. Essentially, I put up a Fibonacci extension, Fibonacci retracement, and get this 127 extension. As you can see, the price came into this retracement zone, stay above the 50% level, and got a nice bounce up. Initially, we're looking at this 200% extension based on this Fibonacci retracement from this particular swing. So right now, that level have been taken out, and we are essentially looking at this level here and see would it be able to break above that. And if it does, then we're basically looking for this 141 extension up at 16,833. But we'll see, because I think we might see a little bit of a pullback. And if that is the case, we could come down and test this 200% here at 15,950, essentially 16,000 level, and also fill this gap, right? Or it could come back and test this pivot high near 15,701. That would be a pullback scenario, and the upside scenario is this right here at 16,833. And for the Russell 2000, you can see the Russell 2000, once it broke this balance area and took out the previous all-time high, you see that it is trying to move up to this 100% extension, essentially the range of 1x extension of this particular range here. And it seems like it is making its move up toward this 2500 level. So we'll see. But if it pulls back, then we'll be looking at this prior high at 2360 level to test for potential support. And now for the Dow Jones Transportation, as you can see, after the craziness from Avis rental car, and so that pushed the Dow Jones Transportation to some ridiculous single-day performance, it finally consolidated back down here. Now this right here, this price action could be legitimate because I'm going to show you why I think that is, could be building a little bit of a higher level, and also what could be the next catalyst that could drive this market and the S&P 500 to a higher level. So right now for the Dow Jones Transportation, we're going to see would it be able to hold above this 17,000, or would it consolidate a little bit more. And if it does decide to come down, then we're basically looking at this 16,170, the prior high from the Dow Jones Transportation, as a potential support. But the upper level here right now, we're looking at this 17,000 and see could it push through this 17,000 and get back up to this 17,500. Because we are looking at this 127 extension here at 17,291, and also the 141 at 17,874. And this is due to the swing down here for the Fibonacci extension. So with the new closing high from the Dow Jones Transportation after the craziness from from Avis, we are looking at the Dow Jones Industrial also closed with a new closing high, all-time closing high, and also touched the 100% extension. Essentially, this range extension, 1x range extension on this level here, you can see that it came peak above that and then came back down, but all in all, it's still closed with a new all-time closing high. And this right here is a legitimate, confirmed Dow theory all-time closing high for the Dow Jones Industrial. So what does this mean? It means that we could see another new high from the Dow Jones Industrial. Now for the downside, let's say for example, if the Dow Jones Industrial decide to pull back, versus we're going to see what it come back down to this 35,150. Right? There is this pivot high here, so this could also provide some sort of initial support here, and this level here is somewhere around 35,600 area. Okay, so keep an eye on that 35,600. But if it come below this pivot high, then we're essentially looking at this level here, the 35,150. Now for the upside, if it continue to go up, then we're essentially looking at this here as a 2x extension. So let me put that in and put in the 2x number. So the 2x number will be 37,786. So if this thing move above this level here at this 36,438, then we're basically looking for the possibility of moving up to this 37,786. Now, looking at the New York Stock Exchange Composite Index, which is a broader market index, it also closed at a new all-time closing high. So that kind of tells you this market is still relatively strong, and also it's a broad-based type of a market right now with a lot of stock participating in the upward movement. Although a lot of time we are focusing on the FANG stock and the the large cap tech stock, but again, if we take a look underneath the the surface, we'll see there are a lot of other stock from other sector that is pushing this market higher, and a couple of those sectors have a lot of potential from the news that we saw last week, and I'm going to talk about that a little bit more later on in this video and tell you what could, as I see it, what could be driving the S&P 500 in the market to a higher high. Now, before we talk about those catalysts that could drive the market to a higher level in the near term, let's take a look at the 10-year yield. You see that the 10-year yield came down, And that is kind of interesting, right? The FOMC meeting was last week, and on Wednesday, Chairman Powell came out and announced that they're going to start tapering, on November, and then reduce the bond purchasing each month by $15 billion. So by middle of next year, sometime third quarter, they consider maybe raising rate, right? So right now the market doesn't seem like it is concerned about the interest rate going up anytime soon. Okay, so right now we see that the 10-year yield came down, and I wouldn't be surprised to see that it might come down and test this 1.426 level here, okay, before it get a bounce back up. So there is a little gap here, so maybe it come down and fill this gap before it pushes back up. And also we saw a little bit of a positive reaction from the US dollar. As you can see, the US dollar peaked above this 94 level once again and try to get itself back up toward this 95.70. So we'll see. Would it be just kind of chopping around here between that 94 and 94 and a half. So, but if we could get above that, move above 95, we could see it trying to work its way up to this 95.70. Then I think the Fed will have a little concern about the strong dollar. Now, with the little bit stronger dollar, we would expect the crude oil price to come down a bit. Although it did come down a little bit, but really is not that much, because right now we basically having a supply issue because OPEC is refused to pump up the supply to try to drive down the price. So what really going to drive down the oil price will be the strong dollar. So maybe the Fed will let the dollar run up a little bit more before they start talking it down. And looking at the precious metal, take a look at silver. Silver came down, tried to get a little bounce. It's still having a tough time getting above this 24.70. And I'm still looking for a possibility of maybe come back down to test this 22.72 area here. And if it does, maybe we'll take a look at for a possible swing long back up to the 24.70. Right now, it's kind of sitting in the middle of this range. So it's like a no man's land, right? It could go up and it could go down. So it's just a guessing game, totally a guessing game right now. I would rather wait until it come up here and then see what the price action might look like. Either, play for the upper move to this 26.60 or for the little bit of, pushing back down for short coming down to this 22.70. But if it come down to this 22.70, they'll be looking for a little bit of a long setup or a bounce back up to this 24.70. All right, so basically playing off the edge of this zone. And looking at gold, gold seems to be wanting to break this trend line down here. And although also a lot of people that is watching this inverted head and shoulder pattern, it could actually come up to this neckline and break it and move up to this 1846. And if we get to this 1846, I wouldn't be surprised to see this 1923. So I'm watching gold here, and it could be a little bit of a positive long swing here eventually, for it to develop. So we're going to keep an eye on that, or see would it be a little bit of a fake out or come up and kind of tease everybody about this inverted head and shoulder, and then pushes back down to the 1716. So it's getting interesting to keep an eye on gold here. It could present some trade opportunity here. One either is going to go on a little bit of a swing up, or might do a little bit of a short down to the 1716 area. Now let's take a look at what the catalyst might be in the coming month, or maybe coming year, in driving this market higher. Many of you probably have seen this news about Pfizer's antiviral pill that could help prevent 89% from hospitalization due to COVID-19. Right? And that is a much greater effectiveness than Merck's antiviral pill that Merck have announced a while back, and Merck only provide 50%. But all in all, with these antiviral pill, especially with such a high efficiency or effectiveness from the Pfizer's, they call it Paxlovid, I believe. It is spelled Paxlovid. So this is I think it's a game changer that will change the current pandemic into endemic. So in other words, we probably will still live with COVID because COVID-19 is not going away. But at least right now we have a mean of treating this infection and without having to go to the hospital, right? So it becomes just like the flu. We might need to get an annual, COVID-19 vaccine shot like the flu shot. But if we, catch or get infected with the COVID-19, just like if we, catch the flu, there are pills or drugs that we could purchase and take and remedy the symptoms. So this is a game changer, and I believe that with this being approved by the FDA in the near future, then that will definitely change the current situation on the COVID-19 pandemic into a COVID-19 endemic. And I think that will be the grand reopening of at least the U.S. economy. As you can see that, as this drug is being distributed worldwide, globally, to address this problem, then I think we'll get back to a little bit more normal. And then we will see some of the, the stock that have been affected by the pandemic drastically will start to come back up. And also those ridiculous valuation placed on some of those, work at home or stay at home stock will get, repriced to what they really should be worth, right? Because like stock like Peloton, right? It is ridiculously priced of value. Like Zoom video, right? The Zoom is also ridiculously priced, and also Netflix, right? Ridiculously priced, okay? And Roku, okay? So we see a lot of those that have benefit from the pandemic. Those stock, unless their underlying business really justify that valuation, then the market will reprice those stock back down. And also some of the vaccine stock that really benefit from the COVID-19 in the early day when we are looking for a vaccine to help to prevent a high level of infection is like Moderna and also BioNTech. Those small company, they did play a major role developing the vaccine. But the vaccine is not a long-term solution to the COVID-19 because there's no vaccine that could be 100% effective. Right? So we need to have effective treatment for those people that get infected. And that's why the long-term play is not the vaccine, but the antiviral pill that Pfizer and Merck have developed. And that is where the long-term play will become. So right now, we're basically looking at the catalyst for these antiviral pill to reopen the global economy within the next couple of years. And right now, we are focusing on the U.S., and that's why you want to focus on those stocks like leisure, traveling, right? So that so what you want to do is focus on the cruise line, right? The rental car, hotel, airline, right? Because those are the ones that are going to benefit, and also casinos, right? Disney, resort, okay? All those other things, like Airbnb, they will benefit from this reopening. So focus on those stocks and look for appreciation from those stocks, and try to kind of shy away from these like the overvalued payment company like PayPal, Square, okay, and also the overvalued stock like Zoom and Peloton, Roku, Netflix, okay. So those are the stocks that I will shy away and then look at refocusing on these leisure and traveling stock and a little bit more of the value stock now. So the value stock will rotate back into a little bit more value. I'm not saying that we won't look at the growth stock. It's just that the growth stock won't be the major catalyst. It will be more of the value stock that will be driving the market to a higher level. So take a look at those stocks and focus on those. So in the coming day, I probably will put out a video on looking at some of those stocks. So be on the lookout for that video. And if you are not a subscriber to my channel, make sure to subscribe and click on that notification icon so you won't miss that video when I post it in my YouTube channel. So thank you for watching. So be sure to smash that thumbs up to help me promote and share this video. Stay safe.